Hey, welcome to this explainer. Today, we're completely tearing down the noise to give you a no-hype, mathematically honest roadmap to investing in Indonesia. Forget all those overnight get-rich-quick promises, and you can definitely forget the confusing financial jargon. We're going to deeply analyze the exact grounded truths that nobody bothers telling beginners, so if you've been sitting on the sidelines, kind of feeling like you don't have enough money or enough knowledge to even start, this presentation is built entirely for you.
Okay, let's dive into this. Here's exactly how we're going to dismantle the barriers keeping beginners stuck. First, we'll look at booty versus Reza. Then, what investing actually is. Third, the 5 myths keeping you poor. Fourth, the honest risks explained. Fifth, 5 exact steps to start right now. And finally, your 10,000 rupiah choice.
All right, kicking things off with Section 1, Booty versus Reza.
So the contrast between these two friends is just absolutely stark. 3 years ago, Booty took what you might call imperfect action. He put 500,000 rupiah into a Reksadana Pasar Uang, a money market fund, on an app called Bibit. He honestly didn't even completely understand how it worked. He just automated a tiny 100,000 rupiah monthly top-up and, well, completely forgot about it. 2 years later, his 3.1 million in total contributions quietly grew to 3.48 million rupiah. He had zero expertise. He literally never checked the charts. Time and consistency just did the heavy lifting for him. Meanwhile, you have Reza. Reza spent those exact same 2 years just waiting for a bigger salary, waiting to read just one more finance book, waiting for that elusive perfect time. The tragedy here is that by waiting to be perfect, Reza achieved zero growth. He hasn't even started. The psychology of wanting things to align perfectly kept him as a completely frozen, while Booty's willingness to just jump in, even without all the answers, started building his future.
Moving right along to Section 2, what investing actually is.
Now, what's really interesting about this slide is the math hiding in plain sight. Investing is simply putting your money somewhere that has the potential to actually grow over time. And why is that absolutely crucial? Well, a standard bank tabungan account pays maybe 0.5 to 2% interest a year? But Indonesian inflation consistently runs at around 3 to 5%. To put that into perspective, think about the price of your favorite nasi goreng from that local street vendor. If the cost of the ingredients goes up 3 to 5% every year, the price of the nasi goreng goes up too. So, if your money is just sitting in a standard savings account earning a measly 1%, it is not keeping up. You are literally losing purchasing power every single year. Your stagnant bank balance buys you less food today than it did a year ago. You're getting poorer in slow motion, all while feeling completely 100% financially safe. Crazy, right? And let's be crystal clear about what investing is not. Investing is not gambling. Gambling is a zero-sum game. For you to win, someone else has to lose, and over time, the house always wins. It's just pure luck. Investing in a diversified fund, on the other hand, means you're owning tiny pieces of real companies that produce real goods and services. When you grab a pack of Indomie at the convenience store or pay your monthly telecom bill, real companies are generating real revenue. Investing means you get a tiny slice of that actual, ongoing economic activity. As those businesses grow, your investment grows. It's grounded economics, not a casino. And here's the kicker. Participating in this economic growth is not just for the rich. That is the biggest lie keeping ordinary folks stagnant while wealthy people use this exact, accessible system to build their fortunes.
Next up, Section 3. We are systematically dismantling the 5 myths keeping you poor. Okay, myth number 1. You need a massive pile of cash to start. Absolutely false. You can open a Reksadana on an app like Bibit today with exactly 10,000 rupiah. That is literally the price of a single cup of coffee. Then there's myth number 2. Investing is like gambling and you might lose everything overnight. Listen, if you dump your entire life savings into one speculative, unproven stock, yeah, that's gambling. But if you put it into a diversified Reksadana, that fund holds dozens, sometimes hundreds of different assets. It's the ultimate don't put all your eggs in one basket strategy. If one company struggles, the others balance it out. Because of this built-in safety net, the chances of a broadly diversified fund going to absolute zero are practically non-existent. I mean, entire diversified markets have never gone to zero in modern history.
Then we've got myth number 3. I need to completely understand the stock market before I even start. Let me ask you this. Do you need to understand exactly how a combustion engine works just to drive your car to work? No, right? And you absolutely don't need to be a Wall Street analyst to invest in a Reksadana. These funds are managed by highly regulated professional fund managers. Their entire full-time job is to analyze and pick the stocks and bonds for you. Your only job is to provide the fuel, just putting money in regularly and letting the pros drive the vehicle.
And this brilliantly illustrates the mathematical cost of myth 4, which is arguably the most destructive. I'll start when I have more money. This is the most expensive excuse you can make, guys, because it completely ignores the snowball effect of compound growth. Look at this. If you invest 200,000 rupiah a month starting today for 20 years at a historically average 8% return, you end up with about 120 million rupiah. But if you say, I'll just wait 5 years until I get a promotion and then invest that exact same amount for the remaining 15 years, you end up with roughly 70 million. Procrastination literally costs you 50 million rupiah in lost potential. Just poof, gone. That's a massive blow. Time in the market is always more valuable than the amount of money you start with. Finally, myth 5. Investing is haram. Now, for our Muslim viewers in Indonesia, this is a very genuine, incredibly important concern. Conventional investments can involve riba or prohibited industries, but there is a solution readily available: Sharia-compliant Reksadana. These are specific investment products officially certified halal by the Dewan Sharia Nasional. They strictly filter out non-compliant businesses and debt structures, and they're super easy to find right now on beginner-friendly apps like Reksa and Bibit. Choosing a Sharia-compliant fund doesn't mean sacrificing performance. It just means gaining both financial growth and complete spiritual peace of mind.
All right, Section 4, the honest risks, explained with radical transparency.
We've talked a lot about growth, but now we really must pivot to that radical transparency I promised. We need to look at the honest risks that typical finance content conveniently skips over. First up, short-term losses. If you invest today and check your app next month, you might actually see a negative number. It feels terrible, I know, but it's completely normal in the short term. The actual risk isn't the market dipping, the risk is you panicking and selling at a loss. Second, inflation outpacing your returns. Pasar uang, or money market funds, are incredibly safe, typically bringing in 4 to 6%, but they only barely beat inflation. For real, long-term wealth building, you eventually need to look at saham, or equity funds. They historically return 8 to 12%, but definitely bounce around a lot more year to year. And third, platform scams. Please listen very carefully to this. Legitimate investments do not offer guaranteed high monthly returns. If an influencer or an app promises you 10 to 30% guaranteed returns every single month, run away. Fast. It is mathematically impossible. Always look for the official OJK logo to make sure your hard-earned money is protected by the government.
But honestly, the biggest risk in investing is you. It really is. It's the behavioral psychology of money. It's that very human urge to buy when everyone is hyped up and prices are artificially high, and that devastating instinct to panic sell when you read a bad headline and the market drops. Obsessively checking your portfolio every single day just leads to emotional decisions, and emotions destroy returns. The greatest investors in the world are actually incredibly boring. They set up automation, because automation removes human emotion from the equation, which is your ultimate secret weapon for building wealth. They automate their contributions, and then they literally just go live their lives.
Let's move to Section 5 and see how this builds into your exact 5-step action plan. Grab your phone, seriously, because here is your precise, step-by-step roadmap as a complete beginner. Step 1. Before you invest a single rupiah, save 1 month of your basic living expenses in cash in a regular, highly accessible bank account. Why? Because an emergency fund prevents you from having to sell your investments at a loss if your car breaks down or you get a surprise medical bill. Step 2. Download a regulated app like Bibit. Grab your KTP and do the quick 10-minute verification process. Step 3. Choose a Reksadana Pasar Uang to start. It basically acts like a smarter, slightly higher-yielding savings account to help you get comfortable without facing any scary volatility. Step 4. Automate a tiny top-up. Seriously, even just 50,000 rupiah a month. Set it to trigger the exact day your salary hits your account. Remember this rule: money unseen is money unmissed. And Step 5, after 6 months of patiently building this habit, once you're perfectly comfortable with how the app works, you can start exploring those slightly higher growth funds like Kempadan or Saham. Boom, that's the entire playbook.
And that brings us to our final part, Section 6, your 10,000 rupiah choice.
Remember Budi from our very first story? He isn't special. He's not a financial genius. He definitely isn't rich. He just started imperfectly and let time do the heavy lifting that money alone simply cannot do. Reza's perfect moment to start was 3 years ago, and he completely missed it because he was waiting to feel perfectly ready. The second best moment is right now, today. You now possess more grounded, honest knowledge about investing in Indonesia than most people your age. So what does this all mean? Will you do something with this knowledge today, or are you going to join Reza on the waiting list? I challenge you to open your app tonight, make that one small, imperfect decision to deposit your first 10,000 rupiah and actually begin building your wealth. Thanks so much for learning with me in this explainer, and I'll catch you next time.